Most people enter crypto during the bull market. They see people making life-changing money. They see someone turn a few $1,000s into hundreds of thousands of dollars. They'll see coins going up 50x, 100x, and they think the game is simple. Find a coin, buy it, and then just simply watch the coin go up. But what nobody tells you, what you don't get to see, is that people who actually make money consistently are usually not the people who show up when everyone is excited. They're the people who are here when nobody cares. They're in the trenches during the bear market, paying attention to what moves versus what doesn't. They're gaining more experience every single day. They're watching thousands of coins move. They're learning what separates a runner from a rug. They're learning how to identify what real attention looks like. And most importantly, they're learning the difference between a coin that is naturally attracting buyers versus a coin that is artificially being pushed to extract money from them. Because that's the reality of crypto. There are thousands of coins created every single cycle and every single day. And a large percentage of them are designed around one thing: getting attention long enough for someone else to buy in. And the harsh truth is, if you can't tell an asymmetric opportunity from a move that's already played out, you're not investing, you're becoming exit liquidity. All right, now it's time to shift gears. Let's go and understand the different market conditions and why they matter. All right, so now let's talk about how the same rules don't apply to every market condition. And this is extremely important if you've never traded in a bear market and only traded in the bull, because this completely changes how the game is played in a massive, massive way. So trading in a bull is completely different because there's an abundance of liquidity and opportunity, and everyone's trying to maximize the amount of returns they're able to make in the bull market. Money is flowing into risk assets constantly. There's too many opportunities for you to fit into, and most likely you will feel like you're missing out because you can't capture them all. But that's great. That's what you want to see in a bull market. Right now, that's not currently how the game feels like. And there's also more participants searching for opportunities, which also leads to a lot of coins pumping because there's more players playing the game, which means there's more liquidity flowing into the ecosystem. And I think the most important part of all this is that a lot of coins get a lot more fuel to go higher. Right now, the way the market is, we don't have enough liquidity flowing. We don't have enough participants to the point where the ceilings are high enough. Yes, we get outliers from time to time as money concentrates into a specific coin, but for the most part, we're not seeing that across the ecosystem with a lot of coins. It's very selective. So now moving on to the next phase, which is trading the bear, is very, very different. And this is currently where we're living in. And liquidity is precious. A lot of participants are more looking to retain and protect capital rather than risk it because these conditions are tough to trade in, and a lot of people don't have that confidence to put their money on the line for rewards. And that's mostly due to Bitcoin not showing confidence, and therefore people aren't going to be willing to bet on the risk assets on the end of the curve when Bitcoin isn't showing strength. If people aren't bidding the safe coins, why would they bid the more risky ones? So that makes sense. So like I said, risk appetite is reduced. Opportunities still exist, which is great to see, but they're more sparse and they move much quicker because the participants are all piling into one opportunity. And if word gets around before you're able to catch it, then you're not going to be able to capture the move before it starts moving. And like I mentioned, the ceilings are lower. People are quicker to take profits. So because the participants are a select few, there's the same money rotating again and again, just switching hands. There's not new money entering the space. So there's certain thresholds, like 1 million is the first threshold. The next one's 5 million, 10 million. All these psychological numbers are check marks in which people will take profits to secure their bag or to reduce risk, one or the other. And if new buyers don't come in, the coin simply won't go any higher. And that's currently the environment we're in. So we need concentration of money on a coin, which requires a meta to be produced. And I'll talk about those a little bit more because there's a lot of patterns with the meta that I think are very, very valuable. So this is a good segue to move on to the metas, and metas produce a lot of opportunity, and there's more than what I've presented here, but this is a good way to just illustrate the different opportunities that metas produce. If you guys were here during 2025, we had the Believe meta, and the Believe meta was launched, no pun intended, by Lodgecoin. And Lodgecoin went from nothing. You can see it launch initially, and then it died for many, many months. And then it went all the way up to $280 million. That's an insane move, extremely quick, happened within a week, I think. And it produced a lot of different winners in the ecosystem because it spawned this internet capital markets meta. And from there, we had a lot of coins start moving towards the upside. You can see Dupe over here. It went from nothing all the way to $76 million over here, and then quickly died. You can see here, this wasn't a bear market. This was a transition from the bull to the bear. So we were in that in-between period, and money wasn't able to sustain this top too quick. You can see we hit the top and we wicked up there. and then we came all the way down. I would say the realistic profit taking here was about 40 million instead of where it went to, which was about $76 million. So money was still sparse during that time as well. It's just they couldn't sustain that level over there for too long. And then in the same meta, we also have CLED. Now, CLED went from 0 all the way to 28 million, cooled down a bit, and then went to 48 million as well. And this was sustained a little bit better as we got revisits to all-time highs multiple times across its lifetime. So you can see that happening as well. And that was just one meta. So one meta produced many, many winners. These are just two examples of them. I've forgotten most of them actually, but there were a couple more. And then we have the bonk meta. Now, bonk meta was a launchpad wars versus pump fun. And initially we had Hasiko, which was this cat. Cat coin went up to 60 million, died, and then went up to about 70 million before it completely died. And you can see it's currently migrated and it's switched from the bonk meta. So this was one coin that spawned, and this was actually the first runner on the Let's Bonk Fun platform, or meta, I should say. But one thing to note here that was really important is that when a meta spawns and a winner comes out extremely quick, usually the market will give you a second chance. Now this is alpha. The market will give you a second chance to look for the next runner up. And I'll show you the bigger runner that spawned out of the bonk meta, which was Useless. And Useless was a lot cheaper than Hasiko, the first cat. And there was a lot of uncertainty. The first run took us up to $30 million and then came back to 6. The second leg of this move took us almost to $400 million from 6 million in a very short amount of time, about a month. So that's crazy to see the amount of gains you can get. And this was a second opportunity at the same meta. So like I said, the meta will produce a second opportunity for you if it moves too fast the first time. And then here's another example of that theory. So here we have GOATC, also known as GOATC Maximus, and we have the chart right here. And you can see GOAT, it went from 0 to $1 billion in a very, very quick manner. It hit $1 billion and then slowly started to die as it got vamped by another coin in the same meta. So Fartcoin was actually spawned from the AI meta, which came from GOAT. And GOAT actually didn't go as high as Fartcoin did. Fartcoin did $2 billion in a very short amount of time. I think it was less than 2 months and we hit $2 billion. So that was your second attempt or second opportunity in the same meta to get the winner. So this is what I'm talking about. When a meta spawns, you will usually get two opportunities. The first one, if you miss it, that's fine. The second time will produce the bigger one. And we've seen this happen with Bonk, and we've seen it also happen with AI meta, and there's more metas as well there available. But these are just the ones that I was able to think of. And then we have Non. Non also went from 0 to 200 million in a very, very quick time span. So you can see the multiple different coins in the meta. Now, this was during peak 2024 season when we got these coins. So you can see the difference of the ceilings within a bull or bear market. Like I said, AI was in a bull market. Here we were at a bounce, a dead cat bounce market. So we were transitioning to bear from a very early end of the bull phase. So we got some nice ceilings here. So you can see 300 million there. So like I said, the ceilings do get reduced. We had $200 million runners. We had $2 billion runners and $1 billion runners coming back to back during a bull season. So you can see the ceilings are much, much higher. And then finally, we have Ansem, the most recent meta. And this one has ran all the way to almost, I think that's 400 million. It actually tapped 400 million. And this one hasn't produced a second runner quite yet. I'm looking out for it. And I think the contender here is Mensa. This isn't a call, but just an observation. You can see this one hit 8 million, went down to 1 million, is currently sitting about 1.6 million. So who knows what the second winner will be, if there will be any. But one thing I want to highlight is the ceiling right there. You can see it tapped 8 million. It's nowhere near the market cap of what we got in the prior metas. And that's simply because we're in the depths of a bear. People aren't willing to risk their cash. And there's also a lot of liquidity sucking events happening with Robinhood taking liquidity from Sol. And the participants simply don't have enough liquidity to be on both chains at the same time. And we're clearly seeing that. So this is just to highlight that if you guys are paying attention to the market right now, and if you have been around, you have that experience, or you're gaining that experience to learn how to find opportunities. And not only that, but if you miss one, what's the next opportunity becoming available if you know the patterns, if you know how this game is played. And because I know how this game is played, when I find a winner like Ansem go off, I'm looking for the next one off the Ansem meta, and Mensa happened to be one of them. And I wouldn't have found this either without the help of a tool I created, which you guys can see here. It was flagged at 40K. Of course, when you flag it at 40K doesn't mean you get to buy it at 40K because the market's moving really fast. Instead, I think the more realistic buy point was about $250,000 to $300,000 in market cap, which is still extremely low considering it went to $8 million. So that's a lot of profit still to be gained. That's about a 20x and that's underselling it. That's just something I wanted to point out in terms of the metas and the opportunities that they present. So next up, we have, you need to operate differently under different conditions. A fact, in a bull market, you can buy things higher and expect them to go higher because people are willing to risk their cash to get those higher ceilings tagged. However, in a bear market, you need to be hunting at lower market caps because the ceilings are lower. So instead of buying at $1 or $2 million in market cap, you have to buy lower to reduce your risk as well as increase your gain. However, that isn't always the case, and there's a caveat to that we'll get to later in this video. The risk still remains. Buying at lower market cap is riskier behavior on its own, less proven success and less lasting power. So obviously the lower in market cap you go, the riskier it is because you still don't have that proven success or momentum or attention behind it to push it to those thresholds that I mentioned earlier in the video. When you're buying at low market caps in a bear, you need to restrain your risk. You'll have a lot of failures because the majority of the coins don't break out of the trenches in a meaningful way, but when they do, they should produce big winners in your portfolio. Now, from the data I've collected, the median market cap that coins reach is about 3 to 5 millions in a bear market, so currently what we're in. Anything past that is an outlier, and obviously the higher it goes, the more of an outlier it is. Most of the coins that go far fast have massive attention and strong momentum, so they don't stop for breaks and they keep going because buyers keep supporting it and coming in. I'll show you a couple of coins right here from the dashboard and the winners it's caught. Ansem had massive momentum. You barely got a chance to actually buy at 203K where it was first seen. Mensa, like I said, 200 to 300K was realistic. Manlet was actually very realistic. I was watching this live as it was crossing 100K, 200K, 300K. I was watching it climb more and more. 3, it gave you about a day and a half to buy it. I had 2 alerts from this. The first one came at 257. The next one came at 350. Ansem, this was the gamble between main Ansem and this Ansem, and obviously we know who won, so I'm going to scratch that off. Gotcha over here we have at 225K, very realistic. It gave you a couple days to buy, about 2 days, between 200 and 500K market cap. And then these two moved really, really fast, so not quite realistic to catch up the 67 or 316K market cap. So I just wanted to give you guys a rundown of the market caps I'm looking to buy in to capture the massive upside while also reduce risk at the same time. And this app is basically a filter. It just sends me quality, and then I have to use my judgment and my own experience to choose which plays are worth taking instead of looking at thousands of coins. So a lot of opportunities still exist in the trenches, even at the depths of a bear we're currently in. And if you're still here learning, then during the bull market, you'll be able to turn a little into a lot because you put in the hours to understand how the trenches work. You know how to spot opportunities quick, especially when you have a lot of competition and not much time to make decisions. The faster and more decisive you can be, the better opportunities you have. Now, the key takeaway here is market conditions are the primary concern. Everything else is dictated by that. So right now, even though we're in a bear, we still have opportunities. The opportunities aren't as great as they would be in a bull, but it's nice to see because come bull time, we know that the opportunities are going to be greater than what is presented to us today. So this is what I was talking about earlier. A lot of people think that just buying lower market cap means you win more. That's not how this works. Lower market caps come with higher risk. Most of these coins fail. Most of them never get attention. They disappear, and the goal isn't just buying cheap, it's finding undervalued opportunities, and I'll show you examples of these here. So profitable trades require patience. A lot of the time, when you're early, you can fumble the bag by selling because the coin isn't moving, but that's exactly what being early looks like. It's not going to be an exciting, coins are moving up really fast. No, being early, the definition is you're going to have to wait for the people to catch up to you because you're early. Slow and boring movement is normal until one day you get an explosive candle and the momentum starts flooding in. Making money in crypto doesn't mean you're constantly doing something. You're not always finding new coins, constantly in and out of trades. In fact, that's how you grind your portfolio down to zero. The best trades usually are the ones where you're doing nothing, just waiting for the market to catch up to your thesis. I'm going to show you a couple of examples here of trades I took in the past where this was the case. So Troll, I've talked about this many times. I've been in this trade and I waited for this move to come to life. 91 days of waiting for it to just stop trading sideways. 91 days, that's 3 months of just waiting. And then eventually one day we had the move finally come alive and break out of this range. And when it did, it moved up 1,500% in a couple of weeks. So that was definitely worth the wait because you could bet size on this. This was a small market cap. It was around 9 to 15 million until it went all the way to around $300 million in market cap. And that's just one example of a slow trade. The next one here is Hammy. And Hammy was actually in the middle of a bull market with a 53-day waiting period. And it went all the way from $1 million from when I entered it all the way up to $82 million. So this is one trade where I was early to the TikTok meta. And the TikTok meta hadn't quite taken off, but there were coins going off of TikTok very early on. And I saw this coin and I was like, this is a no-brainer. I don't know how early I am, but I want to size into this. And I ended up sizing in big into this, around 30 grand, and started taking profits around $25 million. So the wait was definitely worth it because it was only a 2-month wait for massive gains. So the question you have to ask yourself, are you here to make money, or are you here to enjoy the dopamine of finding new opportunities and clicking the buy button? The people who win are usually the ones who can sit through the boring periods because they understand that opportunities are not always available. So there are plenty of opportunities in the trenches. You're not going to catch them all. You just have to make peace with that. But when you do catch an opportunity, you can't be bouncing from one to the other, because what typically happens is you'll sell out from your coin, move to the other one, but the one you were in will end up going off. So you'll buy into that one at a higher price while the other one actually ends up taking off after you sell it. It's funny because it's happened to me, but this is just how it goes. So you just learn over time to be patient, wait for the move to come, and then you can take your profits and do what you were going to do later if the opportunity still exists. So moving on to our next point here is you can't have the money before you have the skill. It might sound obvious, but a lot of people expect to make money in crypto when they arrive to the trenches. From the outside looking in, crypto looks like luck, but I can't tell you how far from the truth that is. But much like anything else in life, you don't get to the end goal without a lot of preparation and study. You can't get the 10x before you understand why something could 10x. For example, my TikTok thesis. I thought it had a lot of attention. People would find the hamster cute. It's a very simple thing, right? But a lot of people didn't see it for 52 days until finally Anson tweeted about it, and then everybody got on board. If I were to give you a large portfolio today, you wouldn't know how to manage it. Much like a fighter doesn't walk into the ring before training, you can't expect to walk into the markets and make millions on your first shot. And if you do, then you most likely won't keep it, because that also requires skill. So you need practice of how to manage a larger portfolio. You need the ability to recognize opportunity. You need to understand what makes a coin attractive. You need to filter out the thousands of coins that are distractions. You need the discipline to hold on to winners while managing your risk, because finding winners is only one part of the equation. Knowing when something is actually worth betting on and when something isn't is where the real skill comes in. So once you're able to do all that pretty well and again, then what you will find is you will have consistent success. Now, the last thing I want to touch up on this video is something that nobody really talks about enough. And that thing is survivorship bias. It's the thing you don't see. What you do see, though, is the screenshots. You see the returns, people posting their wins about how they caught something early, how many X's they got, and the gains that they've made. You always see the success story, but you never see what led to that success story. But what you don't see are the hundreds of other coins they looked at that went absolutely nowhere. You don't see the coins they avoided. You don't see the losses they took. And you don't see the other opportunities they passed on. These are all things that happen behind the scenes, and you end up seeing the end result. They aren't magically finding these winners every single time. Instead, they're probably using a filter, whether that's a social filter or a trading filter. They're reducing their bad decisions as much as they can, and they're protecting their capital until the right opportunities appear to size up. The trench game is all about risk management. I can't stress that enough, because you're going to have losses. They're unavoidable. You're going to have trades that don't work. You're going to have coins you believe in that simply fail. That's normal. However, when those asymmetric opportunities take off, they should allow you to be net profitable and cover every loss and leave you profitable at the end. That's the game. Because the skill isn't just finding winners, it's finding the winners while avoiding enough losers that your winners actually begin to matter. And the pros spend far more times saying no than they do actually buying. So that's it for today's video. I hope you found value here. If you did, make sure to check out the links in the description, as well as subscribing for new videos every week.